Hey everyone, how's it going? That was the closing bell for today, January 19th, Friday, closing of the week. It was a short week, holiday week, so we'll get more normal operations next week. We had a really, really strong day. You can see that we were talking about how maybe it would be we had positive momentum going in, that we might trade down first. That's exactly what happened. We reacted to the level that actually, if we want a precise level rather than a region, we actually reacted to this high, the previous day high right here. That's where we bounced off of, which is not too far from where we drew our purple line. But it bounced off of that twice. We did go down initially like we expected. And from there, we started trading up, reacting to this purple line right here a few times. So we bounced off that twice. Then we came and broke out of the top purple line, and we wanted to see momentum and conviction. And when we pulled back to touch it again, that's when we got it. And the market just took off. In the last hour and a half, the market just really just chopped sideways. There was a lot of action right there, but also what was going on right here is options expiration. Today was the monthly expiration for January 19th. So a lot of balancing going on. Sometimes that gets really volatile, usually not very directional because people are just trying to adjust their new expirations. We didn't get directional, we didn't get too volatile, so it wasn't too bad of a close. But we got really, really directional during the day. S&P 500 up 1.24%, which is on the larger side, and then QQQ up 2%, which is also on the larger side. You can see the scale of this bar is not really matched except for maybe this bar over here, this red bar over here, this red bar over here. It does happen, but it's not a super frequent occurrence. With this surge upwards, it's looking a lot more like we're leaning towards the bull side now. So this ATR, we are getting kind of close to that plus 3 ATR, but this is the same story that we've seen a few times since November. So we hit that plus 3 ATR, looking for a pullback. Instead, we went sideways, and then plus 3 ATR, followed it for a few days, and we got a baby pullback, and then we went back up. Our plus 3 ATR, we could stay at that plus 3 ATR for a few days like we did the last couple of times, and then maybe chop sideways. Or, right now this market is so strong and we are in the middle of earnings season, and it is looking pretty good so far in terms of earnings. It's feeling like a little bit more likely a repeat of the past two performances rather than a pullback at this particular time or a correction at this particular time. So things are looking very, very, very strong. TLT, the bonds, bonds, a little bit of sideways. I really call this sideways motion. It is up 0.32%. It's not super significant. We were still under that MA 150. We're still under the MA 50. So we could just go sideways a little bit, but more than likely at some point we are going to start moving downwards. And if we look at our CME watch tool for March, this number just keeps going lower. These two combined are 47.4. Just yesterday, it was 55.2. Yeah, 55.5. So it is moving down, just like we expected, down to 30-ish%. Now, we thought there would be an associated pullback in the markets at the same time, but what we didn't account for was the strength of the earnings. The strength of the earnings is overriding that for the moment inside the markets. So how do we play this? Well, the SPY is a little bit smoother. It did reach an all-time high now, and this is starting to look a little curved, a little parabolic. Now, we've said that before in the past, but the last few times, so just looking at what happened in the past, parabolic move, sideways. Somewhat just barely beginning to be a parabolic move, sideways. Parabolic move, sideways. Parabolic move now, potentially going sideways. And so where do we go sideways into? Well, each time we went sideways into the EMA 8. Into the EMA 8, into the EMA 8. If I start entering at this parabolic move, if I enter right on that day, or the next day, I have to wait about a week before it starts to keep moving in my favor. If we're doing that with options, we're eroding our time value by doing that. So do I want to go in right now? Do I want to go long right now? No, actually, I want to wait a few days until I see our price come back and touch that EMA 8. And then I'll be a lot more comfortable taking long positions and starting to shift my portfolio away from completely neutral to leaning towards bullish. Not completely bullish just yet. We just slowly move ourselves towards the bullish direction. So let's see how that applies towards QQQ. Same thing, we moved to the QQQ is looking like it pulled back more deeply. It is tending to hit the EMA 20 rather than the EMA 8, although there was one time where we did hit that EMA 8. So I'd be a lot more comfortable waiting for that EMA 20 before jumping head first into any tech related stocks. They are looking really good though. If we look over here on our sector scan, and let's take a look at, rather than the sectors, we want to look at individual stocks in the S&P 500 and QQQ. What we want to look for is some really stable, really good looking trending stocks, and then waiting for them to pull back just a baby amount. I'll show you what that looks like. Okay, so we would avoid things like COO, although that is strong. It's been consolidating for a while, so if it does break out, it could break out pretty strongly, but we don't know when that's going to happen. This is like, how many months has this been? It's been like 4 or 5 months. It's been going sideways like this. Similar with LIN. NVIDIA is strong. It had its sideways consolidation for several months, and then in the past couple of weeks, it really started to break out. But this is the first example we have of what I'm talking about. I guess that's not really a helpful view. Nope, that doesn't help. You can see if I look to the left of the graph and to the right of the graph, it is a very clear line upwards, and the price movement pretty much follows that line. It doesn't really deviate from that line a whole bunch. If I try to do that with this one, NVIDIA, you would see, let me see, I'd probably do it better over here. If I do 6 months, that would be July, August. Okay, so if I take a point at the beginning of August and I draw this, you can see that we deviate quite a bit from that line. But if I do ANET and I do the beginning of August at the open and I do this, we don't deviate nearly as much. And if I could pretty easily just say, oh, well, let's not do exactly 6 months. I could start right here. And you can see that we pretty much trade along this line the entire time. So we don't have that a lot of deviation. It's just a very smooth, very gentle upward movement, very reliable, very consistent upward movement. Things like that give us high confidence in that trend and that the trend will continue. It makes it, these are like the layup trades of the market that make it super easy. You go in at a 1% extrinsic value and you just ride it. And then if it's still going, it's trending in a month, you just do it again. And if it's still trending in a month, you just keep on doing it again. So these are the ones that I want to look for right now, because we are just beginning to potentially transition into a bull market. We're not in full bull mode. We're not in stock picking mode yet. We're not in the mode where, hey, like some of them will go up 50%, while others will only go up like 5%. We don't have that just yet. In this environment, these are easy trends, easy trades are the ones that I personally look for. ANET is looking beautiful. AMD, actually, if I start from November, that's like a very linear movement upwards as well. Meta is looking, well, it was more sideways than linear right here. So this is looking a little bit more like NVIDIA. So what else is good? PHM, if we start at the middle of October, I want to see a smoother trend across 6 months though. Let's see if we can find another one. Eli Lilly is decent. NRG is very good. Energy would qualify. And CBOE is very good and it has a little bit of a correction right there, but that is very healthy for it. It's actually like CBOE quite a bit. And let's see some other ones right here. Allstate is decent. I want to see if I can find like a textbook perfect example. So let me adjust them. Costco is looking very good. Hilton is looking great. Went sideways and started to break out. It's excellent. I know I saw some earlier, just the perfect textbook. Let me see. Oh, they may not have been S&P 500 stocks. Chesapeake, looking great. I'd call that almost textbook. Let me see. If I remember correctly, waste management. Let's try waste management. There he goes. Not for this full 6 months, but if we start in October, that's very, very nice, very textbook, or mid-October, very textbook linear movement upwards. Those are the ones that we want to see, because this could last. This could keep going for another 2, 3, 4 months, 5 months. So I could just do 1% extrinsic value for a month, and then another month, and another month until it starts to flatten out. And if it flattens out, then it's okay. During that month, I would just make less. I wouldn't necessarily lose money. I would just make less, and then I would wait for that trend to resume again. That's the low-hanging fruit in the markets right now. If I go back and put that filter back in place, where'd it go? Right here. Oops. So if I remove that and take a look at the S&P 500 again, then what I want to do is find those nice, smooth, downward trending ones. And if I can find any right now, because the S&P 500 and NASDAQ, all the major indices have been jumping up for the past month or so, if I find any that have that smooth trending down, that is an excellent, excellent candidate, because in the face of really strong markets, those stocks are still breaking down. So I'm going to go towards the bottom of my list and see if we can find at least one nice example. It looks like we may need a little time for these charts to load. That's weird. So let me fetch them again. And we'll just reverse the filter, and then they'll be at the top. Okay. So Solar Edge almost qualifies. It had a very nice downward movement, then it went sideways. Looks like it's about to resume that downward movement, but we would want to wait for that to happen. That's what I was talking about before. If you have this nice trend, I could do this for a month, then this for a month, then this for a month, and then this, and then it stagnates and goes sideways, then I stop doing it, and I wait for this trend to resume again. Let's see if we can get a good downward example. Hershey's comes close. That's more of a downward sideways movement, similar to Solar Edge. Here we go, JD.com. This is a Chinese internet e-commerce stock. You can see that not exactly from the very left, but pretty close to the left of the chart. It's pretty much a straight line downwards. And it did have a period of sideways trading into this orange line, which is the MA90, and then it's just been going straight down. This would be an excellent candidate. Now this one, because it did deviate a little bit from its moving averages, it might pop up. It looks like there's some gap downs right here. It may pop up and fill that gap and hit that EMA 8 again, and then resume downwards motion. JD.com, I would wait a couple days, see if it hits that EMA 8, and then it's an excellent buying opportunity right there. So we're entering a period in the market where it's going to be a little bit easier, or at least it looks like we are. It's going to be a little bit easier to trade. The past month month and a half, 2 months has been what I would call a yellow market. So if I say green market, it's absolutely trade. We're trending very nicely, either up or down, doesn't matter, but there's a really strong trend in place. If I say it's a red market, then it's very clearly non-directional and choppy, and we're not going to get any really good trades out of it unless we're looking at very short time frames. And then the period that we've been in this past month or two has been a yellow market. It's like neither really strongly trending, but not necessarily really choppy either. That makes for some really difficult trading. So you can see that the S&P 500, yes, it did move sideways in a range, but that range is reasonably large. So it wasn't necessarily easy, because we could say, if I looked right here, okay, that's my range, then during this first leg, I could say, hey, we're still trending upwards, but then we pulled back, and then we never trended again. We just hit the channel and pulled back. That's not really directional. You get directional for 1 or 2 days or 3 days, 4 days tops, and then suddenly we reverse direction again. With this breakout, hopefully that has changed and we actually have a clear direction. And then we'll see later on when we actually get that correction in the market. But for now, as long as we get a strong Monday, and usually we would like to see 3 days to find a trend and confirmation. So Monday and Tuesday will be pretty critical in the markets to see if we can resume this trend or if we just start chopping sideways again. Right, I think that is pretty thorough. We'll want to check earnings for next week. I might as well do that to see how much we have coming up. And there's quite a bit, 12 pages, so at least 220 to 240 reporting. And we're starting to get a little bit of breadth, a lot of travel, airlines. Let's just narrow it to S&P 500. Healthcare, financials still going on. We're starting to get some healthcare, some breadth in the earnings that are being reported, some industrials. So we'll get a better idea of broadly in the market how well our earnings are doing. And if we're doing reasonably well, then we can expect the upward movement to resume. So now that we have more data and now that things have developed, we shift our viewpoint. We never want to get stuck in our mindset and marry to our view. We want to allow ourselves to update ourselves as we get more and more data. We want to be very, very flexible. So if I said something yesterday that's different than what I said today, what you want to do is completely forget what I said yesterday, because we have new data. We have new data. We have new information. We can make new and better decisions based on more and updated information. So whatever I said today is going to override anything that you heard me say in the past. All right. Hope you guys have a awesome weekend. We'll get ready for an exciting week. Next week, if we get that resumption of a trend upwards, then it'll be a lot easier for us to make some really good trades. Maybe I'll pop on and do some trade suggestions on option strat like I did in the past months. I didn't really do it during that yellow light market conditions, but if we start getting green light market conditions, I can start doing some example trades again. Okay, guys, have a wonderful weekend, and I will see you guys on Monday.